Here it is, July 4th. Happy Independence Day. And as a special treat, I have a special video here. I'm going to be talking about a brand new project I'm about to launch with my good friend Rob. Now, I've been trading options for like 20 plus years, and something I've been looking for forever is just a really super simple trading strategy that I can just put on, take a few minutes to put it on, and then I can just walk away and forget about it, basically. Super low maintenance, set and forget. Look ma, no hands. And don't get me wrong, I love actively trading and managing positions and doing adjustments and day trading and all that. But I also want to have an alternative, high return, really good, consistent income trading strategy that doesn't require me to sit there in front of the screen all day, that I can just, like I said, put on, set and forget, walk away, go do something for the day, go out to the ball game, go to the beach, and just let that thing work by itself in the background without me having to sit there and watch it, and worry about it, and fret. Just a real set and forget strategy. And I've yet to find one until recently. I met this guy right here named Rob, who's a super smart guy, super cool dude, and is looking for the exact same thing, as I'm sure that a lot of folks out there are probably looking for something. A lot of people who work or who just don't want to be tied to their computer. They don't want to be chained. They're not looking for a second job. They're looking for a way where they can generate income using an extremely simple, safe, consistent income trading strategy that they can just put on, walk away, let it do its thing, and then go out and do whatever it is they want. So when I met Rob and we started talking about this, we put our heads together, and he has a ton of great ideas. And like I said, he's super smart, and began to look for something like this. And over the last couple of weeks, we've done a ton of work, a ton of back testing, tweaking, honing in on a strategy that we think can provide that super low maintenance, super consistent, profitable, set and forget type of trade. And so in this video, we get on Zoom together and we just sort of go over the whole process of like what we're looking for, how we went about it, the back testing, the parameters, the rules, the results. And we're going to officially kick this project off tomorrow, Friday, July 5th, where I'm going to start trading this strategy based on all the work that Rob's done and the ideas and the back test results. And so I'll paper trade that for a few weeks. And similar to my other projects, I'll be recording the whole thing and posting it every day on YouTube. And since this strategy is so simple and hands-free, these videos will be really nice and short. There's no reason or need for me to sit there in front of the screen all day. The videos will basically be me logging in the morning, putting the trade on, and then coming back at the end of the day and just seeing the results. So they'll be super short, concise, fast videos that'll be really easy to follow. And so if this is something that's of interest to you and this is the type of strategy that you're looking for as well, we'd like to invite you to follow along with us through this whole project. You can start by watching this video here in a few minutes where Rob and I get together on Zoom and we explain and kind of break down the whole thing. And then again, starting tomorrow, Friday, I'll begin to paper trade this live in a paper money account for a few weeks. And if everything goes well and as we expect it to, then we'll move into a real money account and we'll start to scale. And again, you can have a front row seat and just follow along with the whole thing. So again, I'm going to start this video in just a minute of me and Rob just breaking down the whole idea here and the process and what we're going to be doing, how we came up with the idea, how we've back tested it, the results, and how we're going to go forward with it and how you can follow along. And to follow along, just make sure you're subscribed to my YouTube channel below. Hit that subscribe button. Also be sure to join my free email newsletter on my website where I will be sending out the daily updates and stats and links to the daily videos. So let's just dive into this video here where Rob and I get on Zoom and we discuss the whole project, break it down, explain it, show you the results and the plan going forward and how you can participate. So here's the video. Here we go. Testing 1, 2, 3, 4. So that's my professional recording voice. All right, so let's see. Recently, I've been telling you guys about a project that I'm doing that we're starting out with a friend of mine. I'm really excited about. And it's actually a way of trading that what turned me on to this was my friend Rob. I just recently met Rob. How long has it been, Rob?
Hello, everybody. This is Rob. I'm Dan's friend, and we've only known each other about 3 months or so, not very long.
Yeah. We met a couple months back. And you actually have a lot of options trading experience under your belt already, right?
Yes. Basically, my background, it originally goes back to the late 1990s. Which back then there was no Thinkorswim. There were no such things as spreads and iron condors unless you're a market maker. All I was doing then was I was purchasing long calls and long puts, speculating on direction, and I did covered calls on stocks that I would own or purchase. And that was about all you could really do back then feasibly. That was about all you could do. The commissions were high. there are no zero DTs, and I actually did make a little bit of a profit on it. It wasn't anything, I'm not going to say I made $1 million or $100,000, but I did make a profit in 1997, 98, 99. I did that and made some money. So, and then I took a hiatus for about 20 years, and then I picked it up again in 2021, where I tried to do covered calls on VXX, which is an ETP volatility product, and
What is it? Is
didn't make any.
You broke up for a second. It's VXX? X?
VXX, it's a volatility ETN or ETP or ETF, and I didn't understand all the ins and outs, so I actually lost some money on that, which was kind of maddening, but I was mad at myself for not understanding how the VXX works, which is a volatility ETF, so I stay away from volatility ETFs. Then in 2022, I tried to do day trading on leveraged ETFs, and that didn't work out either. I lost a little bit of money on that. Then in 2023, last year, I sold naked puts on ETFs and equities and made some money on that, made a few $1,000s, not a fortune, but made some money. I looked back and said, well, I think I just got lucky because last year was a very bullish year. So you could have just basically gone to sleep selling puts and made money. So starting this year, 2024, I look back and said, I don't know if we ever have another bad year. I don't want to be selling puts because you could literally wipe out your account. So I said, I want to find something better. So I kept looking around for something better, and I would just Google, or I'd go into YouTube and type in the search bar, like, what's a way to do safer trades but still have a good return? And then, boom, Dan's YouTube channel came up and a few others. The other people didn't really seem like they knew what they were doing or talking about. They were doing a lot of naked trades, or they just sounded like newbies, like they couldn't even get the language right for options. And I'm like, I don't think these people know what they're doing. Dan, I was immediately attracted to him because I could tell he knew what he was doing. He knew what he was talking about. He expressed the same concerns about me, about some of these naked trades that people do. And so that's how I ended up meeting Dan here.
Yeah. And ever since we started like working together, it's just been, for me, it's been great. I love, we have meetings every Monday, and I look forward to those meetings. It's the Rob and Dan show. We get on there and we talk shop, and it's just been a ton of value for me as well, and hopefully for you. It's just something that I'm looking forward to continuing with, which kind of brings us to this project. Well, first of all, what is it? So can you say quickly, like, what is it exactly what's your ideal strategy or method that you're trying to find to do what you want to accomplish here?
My ideal strategy is one that even a person like myself, and I'm sure there's thousands of people watching this channel that are in my situation, where A, you have a 9-to-5 job, you're not independently wealthy where you can just sit there and trade all day or whatever, and that's B. And then C, maybe you have a smaller account. Maybe you can't do a portfolio margin where you need 125 or 150, or in some brokers you need $175,000. So I'm looking for people who maybe got, maybe $30,000 to $60,000, where it's a smaller account. That's still a lot of money. I'm not saying that's not a lot. It is a lot of money, but it's smaller than 100,000 or 125 or 150,000. A trade, you can kind of set it and forget it. You can kind of put it on, where me and Dan, we have accounts with Thinkorswim. You can put it on and kind of configure it where you can set it and literally just forget it. Like, if you want to check it maybe on your lunch break or at the very end of the day, you would have to place the trade on, and then you could maybe check it once on your lunch break or at the close, and that's about it. You don't have to sit there and watch every tick, which I can't do, and most people can't do, as a 9-to-5 job. So you could literally just set it and forget it, or you could just maybe just check it once in your lunch hour. I'm sure we all get lunch hours. You could do that, and that's about it. Just set it and forget it, and then that's really what I'm looking for, and just to make it easy and not have to, something you got to watch every tick. Which if you have a day job, you can't do that, or something that you're even if it's like not a zero DT, but something where you got to check all this stuff every day. Like what are these different what are the 5 indicators doing, or what is I got to check the this thing or that, or it's just like, to me, that can get really deep in the woods. So I'm looking for something that's simple, zero DT. There's no overnight risk. Just set it and forget it.
Yeah, exactly. And I am too. Even though I love the complicated stuff, and I've been doing this for a long time, so I kind of forget about how complicated a lot of these some of the strategies I do are. But ultimately, and from what I find with a lot of people that I've talked to, ultimately we're looking for the exact same thing. The ultimate thing is something super simple. You can just take a few minutes out of your day. You don't have to worry about it. You don't have to lose sleep about it over it at night. You can check in once or twice a day if you want to. The simpler, the better. And so some of the things when me and Rob, or Rob and I, is that the right proper English? Rob and I, when Rob and I started talking and working together, I was showing him some of the things that I was doing, and as I have to admit, some of the things that I'm doing are probably kind of like too much, but it's for the right person. It's the right thing. A lot of people really like to get deep in the weeds and everything, and I sort of forget that. And so, we finally went through a couple of different strategies that we talked about and looked at, and then how did we get to the one that we're focusing on now, this new one?
Well, the way we finally got it, down to where we got it now, is originally you and I started talking after we had signed up for another course. We're not going to mention any names or anything, but we signed up for another course. Dan had signed up years ago, and I had signed up a few months ago, and we had studied it. I had studied it, and I just looked at it and said, "This is a great course, but I just feasibly can't do it with a 9-to-5 job. It's a great course. The instruction was excellent, but I just can't do it with a 9-to-5 job." So at that point, I started looking for something that was doable, and I kind of stumbled back on a website, and I will mention this website because they publicly throw it out there, tastytrade.com. I'm sure you all heard of it. They advertise it. They say it's okay to talk about because they publicly talk about this. So I will mention that'll be the one name and website I mentioned, tastytrade.com, where I have been watching those guys, and they are excellent. I've been watching them almost every day, maybe not every day, but dutifully since 2018. And they have a lot of different studies, and that kind of inspired me. And last year they started doing a special series I think it's every Tuesday, every Thursday or something. They would do one on zero DT. So I started watching these, and it inspired me to start to maybe check out some of this zero DT stuff, because I'm like, well, this is great. There's no overnight risk. There's no gap risk. The market's open 9:30 a.m. to 4 p.m. That's Eastern time. I'm in the Eastern time zone. If something happens overnight, okay, you don't have to worry about a big gap down because you're not getting into the next day and you're flat by 4 p.m. Eastern. So that's what attracted me to the zero DT, plus the simplicity we mentioned before, set it and forget it. If you could set it and forget it, you don't have to watch every tick, and maybe you just check it on your lunch break or whatever. So I began trying some different ideas. I learned from them and kind of back tested some stuff that I came up with on my own just from some experience I've had, and then Dan shoot me some of his 20-year plus experience. And then we eventually watered it down to this strategy to where, we felt comfortable, like, okay, it's a zero DT. Okay, is it a set it and forget it, or maybe check it once in your lunch break? Yes. And we just kind of eventually just funneled it down to something that we could do. And also, for small accounts, because, when I'm doing this also, I'm thinking, yeah, not everybody's got $125,000, let alone millions of dollars. So, that's kind of how we honed it down to this strategy, and how we've been talking about it now for a few months, and how we just kind of, watered it down to this.
Right. Another thing is it's the same underline, which is nice. It's not like you have to go look for different stocks and all that.
Correct.
Yeah, so there's a lot of really great benefits, and it's trading the SPY, right, or the SPX.
Yes, the SPY, SPY, or Spider ETF. That is the only thing that we would be trading. Yes.
Yeah.
You don't have to worry about stocks and earnings and all that.
Right. Exactly. Which is a huge plus. Yeah. So then we started to now let's talk about the back testing process, because on my channel I'm doing these different projects where I always. I start to paper trade it first. I come up with an idea and I start to paper trade it. But the element that I was missing before is that I never really did back testing. Sort of back testing, but not to the extent that I would like to. And I think is probably appropriate to kind of just find what ideas are worth pursuing and which ones are not. And so I just recently gotten access to a program called Option Omega, which is a backtesting software that I was familiar. I had heard of it, but I wasn't really familiar with it. I'd never used it before. But Rob had quite a bit of experience with it. So our next step was to take the ideas that Rob had come up with and start to run them through that, right?
Yes, yes. Basically, I was a subscriber in the past to Option Omega, and I found it to be a very useful, excellent site. As far as I know, I could be wrong, but as far as I know, it is the only back tester that you can purchase on the internet that tests zero DTE strategies. Now, there might be some computer engineer out there who designed his own and uses it himself or herself. That's great. But I'm just saying somebody that, like me, I'm not a computer programmer. I don't think Dan is either. I'm assuming most people are not, so you can't program. This is probably the best one out there if you want to do back testing of zero DTE strategies. And it has a few tickers. It has SPX, SPY, again, and some stock ones, I think, like Apple. I focused on SPY because of the liquidity. You don't have to worry about a systemic risk like an earnings announcement or a CEO, resigns. None of that stuff. It's SPY. And then what we would do the back test it is whenever we would have our meetings on Zoom, Dan, since we've been having them now a couple of few months, we would, you would, like you said, you would go into the Option Omega, and I would explain to you how we would, to use it, because again, I had been a subscriber in the past, maybe, I don't know, probably it's been almost a year now. It's been a while. But I still remember how to use it. It wasn't like it was 10 years ago and I didn't remember how to use it. So I would show you, like, hey, let's try this, let's try that. Like, let's try, like, I remember in the beginning we were trying, like, SPX, and we were trying, there's another famous strategy out there, a 111 or a 112. We would try an Iron Condor. Now, keep in mind, when me and Dan are talking about this, we're not disparaging anybody's strategies or ideas. We're just saying different iterations that we tried, and with what we came up with, what we were comfortable with, and we wanted to share with people. Because again, we're looking for something that's simple, something that doesn't have overnight risk, something where you don't have to have $1 million or even $100,000, something where you could sleep at night, literally sleep at night, because you're going to be flat at night because you don't put the trade on the next day and you're out by the close. So we would try different things, and we came up. And again, a lot of these ideas, I would be watching Tasty Trade, and they would give me a lot of excellent ideas. And again, Tasty Trade is a great website as well, and that they publicly, put out ideas. So, they put it on their website. They have YouTube where they're saying, hey, come to our site. So a lot of these ideas I'm saying, I would watch them, and they would give ideas also. So we would try it, and we came up with ultimately came up with one. We wanted to come up with one that didn't have too many legs in it, because that's how you can introduce a lot of commissions, a lot of bid-ask spreads. The more, as you all probably know, the more legs it has, the more options, then you're going to have the more commissions, the more bid-ask spreads, the more slippage. Now, even with a liquid instrument like SPY, even with that, if you get too carried away, it can add up with commissions and slippage. It can still eat away, even if it's just a penny or two. It can slowly grind into your profits. So we ultimately just came up with, after all this testing, and we probably, between our, Zoom meetings and talking every week on Zoom, I would say we probably run, I would say it's not an understatement to say we probably run 1,000 different tests, with you using the OptionOmega.com backtesting software. Probably 1,000 you run, I assume. So it's a lot. Maybe not, if not 1,000, probably at least 500, but it was hundreds of back tests, if not over 1,000, to finally get where we were talking. Like, he would bounce something off me, I would bounce something off him to get to where we got. So what when we get to the details here in a minute, this is the result of, I don't know, maybe a couple of months of work of us talking every week, sometimes even a couple times a week, talking for an hour, hour and a half this through to say what's something we could share with everybody to hone it down. So that's kind of where we got to, Dan.
Yeah, and like when the Option Omega is really cool. It's user friendly. It's super intuitive. And before I saw Option Omega, if someone were to mention backtesting to me, I would always think of like manually backtesting, because that's the only backtesting I've done where you actually like go back in time and you kind of tick day by day, minute by minute through a strategy, which would take forever. And option omega is, it's not like that. It's, you put in these parameters. It's very simple to enter into certain parameters of what the legs you want to use, like when you want to get in, when you want to get out, profit target, etc. And you hit a button, and you can go through years. Like, it'll spit out the results for years of those trades, like in what, like 10 seconds or something.
Yeah, 15 to 30 seconds tops. Yeah, it's pretty quick.
Yeah. So I think manually backtesting is good and super useful, but I think that this is the perfect first step, is to use something like option omega, where you don't spend a lot, you don't waste or potentially waste a lot of time, manually backtesting that may not even have legs. You put it through something like option omega first, get the results from get a big data set, and then if the ones that kind of filter to the top, those are the ones you can take on to the next step, like backtest and start to paper trade, and potentially trade live. So that's the process that we did with this. And so we did tons of back testing. We dug deep. And so just last week, we came down to the final, kind of like the final picks, or what would you call it? The final.
Yeah, the final idea or strategy, like what I believe is the creme de la creme, we came up with this culmination. And I think we just arrived on it. It was either last week or maybe even earlier this week on Monday when we spoke, but it was just recently, no more than a week ago.
Right. So you came up with a bunch of, you put it into Excel sheet. You want to go over that Excel sheet real quick?
Sure, I can go over that, Dan. I'll be glad to. When I ran these tests, I ran them with, first of all, I did the back test with SPX, which, as you all probably know, is 10 times the notional value of SPY. I ran them on, and by the way, the trade we're doing are short strangles, 0 DTE short strangles. And first I tried on SPX, I tried on 5, 10, 15, 20 delta. Then I tried on Spider, 5, 10, 15, 20 delta. And the SPX one, the best one on that was 15 delta. So the other ones, I just kind of threw them out. The 5, 10, and 20, I didn't like them. It was too much risk, or they didn't make any money, or whatever. 15 delta gave a good balanced risk reward. I tried on Spider, 5, 10, 15, 20 delta. And I come to the conclusion that the 15 and or the 20 delta are the best. In a lot of cases, not all, but in a lot of days they turn out to be the same strike anyway. Like you could look at the series for the options, and you might see a 10 delta, 18, and then a 30. Well, when you trade that, 18 is going to be the proxy for 15 or 20. You're not going to pick the 10. You're not going to pick the 30. Those are way off base. So you're going to pick the 18. Sometimes you would get exactly a 15 or a 20. And I think if you had that, you could pick either one. If you're someone that wants to get more credit and you're more risk tolerant, pick the 20. If you're less risk tolerant, you could pick the 15 if you don't mind getting less credit. And the results we came up with were quite amazing. What I did was I went back to November 28th, 2022, and I back tested it through June 20th, 2024. That's about a year and a half. The reason why I picked November 28th, 2022, that was not a coincidence. That was a Monday, and that was the Monday of the first day of the first week that you could start trading SPY options every single trading day. I believe technically they started the week before, but the week before was Thanksgiving. I didn't want to clutter it up because obviously Thanksgiving is closed and the day after Thanksgiving is a half a day, so I didn't want to clutter it up, and then the day before is a very light day, so I said let's just start the Monday after Thanksgiving to make it fair. So November 28th, November 28th, 2022 through June 20th, 2024, you literally, if you wanted to, could have traded Spider options every single day, every day the market was open, of course. We're not counting weekends and holidays, without exception. That was what you could do, Monday, Tuesday, Wednesday, Thursday, Friday. When I did that, the 15 and 20 delta did very well. The expected profit per trade, when I say expected outcome, this includes wins and win rate, loss rate. The win rate's about 50%, 50%. It's about a coin flip, which means if you're going to do if you have a 50% win rate, your win and your loss have to be at least 1-to-1 just to break even. That's even before commissions and slippage. Well, I'm happy to say in this case, the wins were anywhere from 1.75 to 1.81 times your losses. So they were well over 1 to 1. It wasn't even close. So that gave an expected outcome on the 15 Delta. It was expected $9.95 per lot. This is all one lot. The 20 Delta, the expected outcome was $13.16 profit. That was on one lot. And this is about a 50, it's like a 49.7% win rate. It's close enough. I just say 50 to round it up. So we'll just say 50. It's like a coin toss. But it came out to be $9.95 expected profit, 15 Delta, $13.16 expected profit, 20 Delta. This is testing it every day from November 28, 2022 to June 20th, 2024. And when I tested it on SPX, the expected profit, the expected outcome was positive. All these trades I'm mentioning have a positive edge. Anything that was negative, me and Dan, we just threw it out. We didn't even consider it, because why are you going to trade a loser? Doesn't make any sense. So the expected outcome was positive also on SPX. It was $66.02, which is 5 times the SPY 20 Delta and 6.6 times the SPY 15 Delta. I was a little surprised by this. I thought it was going to be 10 times, because when you look at just the raw price of SPX and SPY, SPX is about 10 times. It's like 9.9, I think, times the SPY. So I was a little bit surprised by this. I don't know why that's the case. I can guess and say it could be because the bid-ask spread is much tighter on Spider than it is on SPX. On Spider, the bid-ask spread, on the options I'm talking, not the underlying, the options, it's about a penny or two. On SPX, that would translate to 10 to 20 cents. But in a lot of cases, it would be like 40 cents, 50 cents, $1, sometimes even $2 when it was during, really some high volatility times, high VIX times. So that's my guess. I can't, say that's the absolute reason. I can't prove it. But the facts are the facts. It only made 5 times the profit and 6.6 times the profit of the 20 Delta and 15 Delta Spider trades, respectively, short strangles. So again, we're taking a 15 Delta call, 15 Delta put. I assume everybody that listens to this knows what a strangle is, So we're not going to define that. But anyway, that was before commissions, and I thought that was quite amazing. That's what it was. Now, the interesting thing is, I also went back tested and added in commissions and a little bit of slippage. I tried to be reasonable on the back test that you were running there, Dan. I said let's run it with let's back test it with let's include 70 cents commission on Spider, which is Thinkorswim's commission structure. I think it's 65 cents, and then there's a couple regulatory fees in there. Let's make it 70 to get in and get out. And I said, let's say a penny slippage, because they're literally a penny wide, maybe 2 pennies. So I said, let's throw it a penny wide. On SPX, I said, let's throw in $1.20 commission, because there's an extra fee involved that doesn't apply to SPY. You still have the commissions with Thinkorswim, but then there's an extra. It's called a CBOE proprietary exchange fee. So that makes it $1.20. And I said, let's just say 10 cent slippage, which I think is reasonable. I said that's probably it might even be more than that, but I said 10 cents. Even when you add in the additional contracts from Spider, because somebody might be thinking, oh, well, yeah, I can make as much in SPX as Spider, but I got to do more contracts and I have to pay all these commissions. You do pay more commissions, but you end up actually making more money. You end up making more money with SPY if you did, say, 7 contracts of the 15, because you can't do 6.6. You can't do a fraction of a contract, so I just round up to 7. If you did 7 contracts, meaning 7 short strangles on 15 Delta or 5 short strangles on 20 Delta, you end up making more than if you just did 1 on SPX. And I think it's because of this bid-ask spread is so much tighter. So when you throw in the commissions, and even just a little bit, like I said, just 1 cent slippage on Spider and 10 cents on SPX, the Spider ends up making more money and has a better rate of return and has a better Kalmar ratio. For all of you out there, if you don't know what a Kalmar ratio is, It's simply the compound annual rate of return divided by the maximum drawdown. And they call it the Kalmar ratio. So it had a better Kalmar ratio on the Spider versus the SPX. So we decided to go with the Spider. Not only that, for any of you out there that can't do portfolio margin or have smaller accounts, say if you have $50,000, you don't have $100,000, and you can't do portfolio margin. I looked at it even with Reg T. If you do a short strangle 0DT on SPY, the buying power is only about $8,600. If you do it on SPX, it's $86,000. Now that means even if you had portfolio margin on SPX, let's say at $125,000, it still may not be wise to have a buying power reduction of $86,000. Realistically, you might need several $100,000. You might need $500,000. I don't know if there's too many people on this listening to this to have $500,000 to trade. But if you got $50,000 and you cut everything down by 1/10, you might be able to do the SPY short strangles, buying power 8,600, and that's using Reg T. Which is typically more burdensome on the buying power, uses more than a portfolio margin account. If you do happen to have portfolio margin, you do this. I don't know what it's going to use. I can't say, because portfolio margin depends on what positions you already have in your account. Everybody's account is going to be different. Reg T is the same for everybody. It's a one size fits all. Portfolio margin, if somebody has all cash, it might be different than another guy who has, 1,000,000 shares of Tesla. Who knows? I don't know. I can't say.
Yeah.
So we came up with this idea that doing the Spiders 15 or 20 delta turns out to be the best, even with commissions. Now, if you just do one lot of Spider, of course you're going to make less than if you do one of SPX. But that's why I was saying, if you do 7 of the 15 delta Spiders or 5 of the 20 delta Spiders, you'll make more money than one of the SPX. I think when Dan does this, starting, I believe today, by the way, is Wednesday, July 3rd, in case anybody is wondering what the date is. I believe by Friday, July 5th, Dan is going to start paper trading with just a one lot. We all got to dip our toe in the water. You don't just jump in, because it could be 200-degree water and you'll get scalded to death. So you got to dip your toe in, test the water. I believe, Dan, correct me if I'm wrong, but starting this, obviously tomorrow is the holiday, July 4th. Friday, July 5th is a full day, I believe, for stock market. You're going to test this out with a one lot on a paper trade. If it does well, let's say 2-3 weeks down the road, then you're going to place a live trade with a one lot. If that does well 3 or 4 weeks down the road, then you maybe could bump it up to 2 lots to 3 lots, and maybe, who knows, 6 months down the road, you might be doing 5 to 7 lots, which would be, you'd be making more money than if you did one SPX. So you don't need to do 10 of the Spider to get one of SPX. Again, my theory is because the bid-ask spread is tighter. I will say this, the Spider trades, Spider options, I don't know if anybody knows this, the Spider options trade on all 17 U.S. options exchanges. So it has a lot of competition. The SPX only trades on the CBOE. It only trades on one exchange. So just something to think about. Competition, in my opinion, is a good thing. By the way, I don't know if Dan says this at the beginning of all of his videos. I think he does, and Dan, correct me if I'm wrong, but anything we and I are talking about here is for A, entertainment purposes only. B, we are not licensed brokers. I just do data entry. I work for an insurance company. I'm not a licensed broker. I'm not a financial advisor. We're not registered with FINRA, SEC, or any government or self-regulatory organization. We are only telling this is entertainment purposes only. This is not advice. You should do your own due diligence. You should do your own research. You should do your own back testing. I can only say what Dan and I have discovered here by him using the option Omega and me giving my 2 cents input, since I used it before and I kind of helped him get up to speed on it. And we can only say, Dan's going to do the paper trades. I myself, if anybody out there is wondering, have I traded this yet with my own money? I have not, full disclosure, because we just literally, been testing this a few months and we hammered it out, all the nitty gritty within the last week. I think it was actually just Monday, 2 days ago. I will be trading my own money on this probably in the next few months. I do want to paper trade it myself, but probably within the next 3-4 months, I will be putting real money on it, just so you know. So I don't want anybody out there thinking I'm just talking, but I'm not willing to. I'm talking the talk, we're walking the walk. Me and Dan, we are willing to talk the talk and walk the walk. But everybody out there, you have to do your own homework. Again, this is not financial advice. We're not brokers. You have to do your own homework. This is for entertainment purposes only. So I just want to make that crystal clear out there.
Exactly. As my friend Rod, not Rob. This is my friend Rob I'm talking to. I have another friend named Rod. As he says, look both ways before crossing the street and don't eat yellow snow.
Absolutely.
And the whole reason why, if you see what we're doing here, I think that this is probably the proper way that everybody should do their own due diligence. You know, this is your real money at risk here, and you should go to the depths and dig in as deep as we are. Like the smart way, and also to be a good, responsible parent and try to teach my kids how I think they should do it. This is how I would teach them to do it. It's the exact same process. Go through like an option omega back test first, filter out the good ideas, and then back test those like manually. And then paper trade that to get kind of a live feel without risking real money. And then talk to a financial advisor and do all your own due diligence again, right?
Exactly, yep.
So let's talk about the strategy now. So the strategy is a strangle. And
yes.
So this is a short strangle. So this is a naked strangle, correct?
Correct. Mm-hmm.
And maybe we can just give them the brief breakdown. Now, if the word naked in relationship to options scares any of you, I know that it scares me, and I'm sort of the point of view where I always like to have things covered. There's ways to do this in a way so that they're not naked. But let's go through what we found and see what the results are. As you can just watch what we're doing with this paper trading project that we're doing. And if it's still an issue, there's ways around the naked part of it. But let's just stick to the strict kind of the rules that we came up with the back testing. And so what are those rules? Like what is the simple strategy rules?
Well, the simple strategy rules, when I was back testing it and the way we're going to be doing it, the way you'll be doing it, Dan, starting Friday, and like I said, I intend to do it live in a few months also with real money. At 10 a.m. Eastern time, I would put the trade on. I would pull up the Spider 0DT options chain. I would look for a 15 or 20 delta. Most of the time, as I was saying earlier, on the interview here, they were the same thing. I would see a 17 or 18, and then I would see like a 26 and like a 10. Well, okay, that's a no-brainer. There's no 15 or 20, but you're going to pick that. Most of the time, not every time, most of the time it's going to be the same. If it was 15 or 20, then again, with the back tester, I think, Dan, when you were running it, sometimes it would just have to make a judgment call. Like if it was 15 and 20, if it was a 15 test, it would just pick 15 if I recall, and you ran it. If it was 20, it'd pick 20. If there's a hard 15 or 20, it'll pick 15 or 20, and you have to make that judgment whether you want more credit, get a 20, or if you're more risk averse, pick a 15. But if it's an 18, the way I believe when you were doing the back test, it would just like whichever is closer. So that's what you would do. You just say, okay, so if there's a 19 and then there's a 30 and a 10, you just pick the 20 because that's the closest. Or you just pick the 19, excuse me, because that's closer to 20 than, obviously 19 is closer to 20 than 30 or 10. So that's just basic math here, basic just looking at numbers. So anyway, 10 a.m., you place the 15/20 delta short strangle. And the way that, the way I was looking at it, and I don't think I mentioned this, but I also started to manually back test it as well. I think that's a good idea as well. Manually backtest some of select dates. It's hard to manually backtest hundreds of dates because you'd be doing it forever to the end of time. So I have also done some manual backtests, and they showed some promise. And what I would do is I'd go into, again, I mentioned two names: Tasty Trade, great company. You can learn a lot there. Thinkorswim, that's who me and Dan as her broker. You can use whoever you want. In our opinion, Thinkorswim is probably one of the best out there. Tasty Trade is also a great broker. That's another excellent one. But Thinkorswim, excellent broker. They have on demand, where I would go back and look at on demand and pretend like, hey, I'm going to put a trade on at 10 a.m. And I would just, I'd pick a 15 or 20, or if there wasn't one, I'd pick like the 18 or whatever was closest. And as soon as I would leg into it, by the way, to avoid. The reason why I legged into it, I learned from Dan doing his older videos. Some of you may recall when he tries to put on multi-leg strategies, he would have a hard time getting filled. So I would come under the understanding that, well, maybe if you do it one at a time, you're okay. I can say with the spiders, because they're so liquid, if you leg into it, it's almost going to be the same as if you did it at once, because you can literally place place the put side first in the call, vice versa, and you're going to get filled pretty much instantly. So you're literally placing one trade and the other within 10 seconds. It's not like you're placing one and waiting an hour and like, oh, well, I had to leg into it. No, it's literally within 10 seconds. So if you want to leg in, that's fine. But the reason why I like to leg in is because as soon as you get filled, let's say you get filled 25 cents on each side. I'll just make up a number. Then we're going to use a 3x stop loss. So if you get filled at 25 on each side, then we'd say, okay, well, what if we bought it back at, say, 3 times? Like, say if we bought it back at 20 or 75 cents, which means it's a 50-cent loss. That's a 2x loss of the credit, 3x for your stop. If you get filled as one unit, like if you put them together as one, it might be harder to kind of discern, okay, well, which one did each one get filled at? So we would say, all right, if you break them up and do it that way, now you know exactly. There's the call got filled, there's where the put got filled, and then you can say, all right, place a stop on each one to get out at 75 cents. That's 3 times the credit. If you do get stopped out, in that case, you would lose 50 cents on the losing side because you sold at 25, you bought it back at 75. But then the other side, it expires worthless. You got 25 for that, so you end up only losing 25 cents. I believe my math is correct. Dan, point out if I make any math errors, but I think that's correct. These are just numbers I'm making up, but you get the idea. So if you sell them both at 25 each, you collected 50. If you get stopped on one for 75, well, 50 minus 75, you only lost $25. But if they expire worthless, you made 50. So that was the other thing. What we also did is, technically with SPY, you can't. The one disadvantage, I will say this, that SPX has. SPX at 4 o'clock, they either expire at 4 p.m. All times are Eastern, I'm mentioning. I live in the East Coast, so all times are Eastern. 4 p.m. Eastern, they either expire worthless, or if they're in the money, they just debit your account for the cash. Boom, it's done. With Spider, as we all know, those are physically assigned. They're not cash assignment, they're physically assigned. They're not cash settlement, I say they're physically settled. You don't want to, I know I don't want to end up short or long Spider shares the next day and be like, what happened? Now you're subjecting yourself to overnight or gap risk. So we would get out, we would close the trade at 3:59 p.m. Eastern Time. And by the way, when I ran the back test, that includes even the commission for closing it out too, by the way. A lot of times you could close it out at a penny, like if it was going to expire worthless. On the SPX, it would have been 0, but here you're buying it back at a penny. We would just get out. And the reason why we would do that, the SPY options, I don't know if anybody knows this, so this is just a tidbit to know. The SPY options trade until 4:15 p.m. Eastern Time. But the last time I checked, I could be wrong on this, I checked this a few months ago, so maybe this is outdated, but the last time I checked, the OCC allows a long option holder of equity options, we're talking Spider now, you can exercise it until 5:30 p.m. Eastern Time. So if something happened between 4:15 and 5:30, let's just say some anomalous event happened in the world or in the United States, you couldn't get out of that trade. You'd be stuck with it. So I just put in to be safe, because remember, like I was saying at the very beginning of the call, I'm looking for safe stuff. I don't want to be worried about it. I sure as heck don't want to be worried about it overnight. I don't even want to be worried about it for an hour and 15 minutes.
Right.
So, I'm a nervous Nelly type person. I don't even want to worry about it for 10 minutes. So I just said, close out of it. If it's only a penny, it's not worth taking that extra penny risk. It's worth paying the whatever commission, 70 cents, 65 cents, plus any fees with Thinkorswim. Obviously, if you have a different broker, it's going to be different commission structure. I was just programmed as though it was Thinkorswim. So anyway, and it still turned out to be profitable. With Spider buying it back at 3:59 p.m. Eastern. So that is what I will add. That is one caveat. That is the one disadvantage of Spider over SPX. But even after running the test, and me and Dan discussing it, we feel, in our opinion, that it was worth it still to do that. And even factor in the commissions of closing it out. To me, it's just worth it to pay the penny to close it out plus any commission, rather than worrying about something happening in the next hour and 15 minutes or whatever. and then you get assigned the stock, and then something happens overnight, and then it's like, well, what if it gaps? What if the SPY gaps down 10 points because something terrible happens? Now you're really in trouble. So I will say that. In my opinion, it's just best to just close it out, not take any chances. Why risk it for an extra penny? Or, really, the notional value is $1. You're closing out for $1. Of course, when you multiply it by 100. So plus the 70 cents commission. Why risk something happening for $1.70 when you're still making profits? So that was the conclusion we came to, and we're still working on. And I'm sure those out there that have Thinkorswim, maybe you can figure it out too. I believe there is a way, I haven't done it yet, where you can literally, once you put the trade on, you can just tell it like, okay, get out at either the stop loss, or if it hasn't hit by 359, just close it out, just buy it back at the ask or something. Right. Something like that, just to close it out. I believe Thinkorswim has fancy orders where you can do that. Since I mentioned Tasty Trade, I think they have something like that too. I'm not 100% sure, but I know Tasty Trade is another excellent firm. I'm sure a lot of people on this call have Tasty Trade, another excellent brokerage. Thinkorswim is excellent. In case anybody's wondering, this question may come up. I did the tests, and on the 15 Delta, you do get whipsawed 1% of the time. On the 20 Delta, you get whipsawed 1.3% of the time, which means both your stops hit. So it's very rare. Roughly 1 out of every 100 trading days, yes, you will get stopped out on both, but it's such a rare thing that you're making enough money on the other ones that it's going to offset that.
Yeah.
So I'm not worried about a whipsaw, and if it happens once every 100 days, it happens. That's why we have the stop loss orders in place. With Spider being very liquid, being traded on 17 exchanges with the tight 1 or 2 penny bid-ask spread, and being traded on 17 exchanges in the competition, I'm not worried about a lot of slippage. You could say buy it back at the ask. I don't think, if it's 49 by even 51, 2 cent, I'm not worried about you do it at 51 and you're going to get filled at $5. I just don't see that happening with SPY ETF options. And again, we'll learn more once Dan starts paper trading this Friday, and then really once he starts live trading it. But I can't see it happening. I mean, it could. Anything can happen, but I mean, I just don't know how it could happen. But I guess anything's possible. But I'm just saying I'm not worried about it. I don't think Dan is. That's why he's willing to paper trade it and then put his money on the line a few weeks down the road. Obviously he wouldn't do that if he thought it was going to blow up his account and put him out on the streets and be homeless. So,
My wife and children would be pissed.
Oh, yeah, I'm sure they'd be very angry. So, very angry. So, anyway, that kind of, in a nutshell, is the trade itself. Interestingly, also, here's another thing I just ran. And actually, Dan, I know we didn't talk about this Monday because I just literally did this earlier today before we talked. I went back and looked at all the trades from November 28, 2022 till June 20th, 2024. Every day where you could have done a trade. The longest losing streak was 7.
Oh, wow.
So just in case anybody's wondering, that was the longest losing streak. It was 7. So I don't think that's horrible, especially if the losses are contained. Meaning, like, okay, if you lost $50 a day, and again, like, we're going to start out 1 lot. We're not going to start out with 100 lots. That would be stupid. But if you start out 1 lot a day, if you lost 7, okay, you could probably still sleep at night. I know I could. So it's always start out small. But anyway, that is what we came up with. I will say this also about, I'm going to mention some of the market environments, Dan, if I could.
Yeah, that'd be great.
We had 8 different market kind of environments. Like, we said, well, what if we wanted to test it during a crash? So I tested it during, like, the COVID crash. I tested it during, like, 2021. We had a really up market. The disadvantage of those markets is, at the time, they did not have 0DT. Like I said, 0DT November 28, 2022, and we really haven't had any significant outlier markets. I mean, we had a few bad days, yes. I know there were a few bad days March of last year when a certain bank in the United States collapsed. Again, we're not going to mention their name, but there was a certain bank that collapsed, and people were worried, what if it spreads? yes, that was a there were a few high VIX days, but it was nothing like COVID. So I did test COVID. I tested, 2021. I tested. I know in 2022 the first 3 months weren't that great. There was a grind down. I believe that was when the war between Ukraine and Russia started. So anytime war breaks out, kind of makes everybody nervous, understandably. So I think that during those times there was only a Monday, Wednesday, Friday. So okay, it wasn't every day, but it was 3 days out of 5 ain't bad. During the COVID crash, they did very well. I can say that the 15 Delta lost $621 per lot. The 20 Delta actually made $59 overall. This is overall, by the way, I shouldn't say per lot, but $621 trading one lot overall. At the end of the crash, it lost 621. The 20 Delta made $59. That was if you were trading a one lot every day, so that's not bad. The grind down, as I call it, or maybe not, maybe I shouldn't call it a grind down, but the bear market or something of the first quarter of 2022, the 15 Delta made $502. The 20 Delta made $190. That's not per lot. That's total at the end of the period. Okay, trading it every day at the end of the period. That's how much money you would have made or lost. I even adjusted the drawdowns for notional value. Like, well, what if we were doing SPX and you did 7 contracts, the 15 Delta and 5 of the 20 Delta, like I was talking about earlier? Even then, during the COVID crash, I'll just point out that drawdown because that I think everybody who's listening to this can agree that the COVID crash, and I actually read this somewhere myself, that was the worst, quickest, most severe, sudden, sharp drawdown since the crash of 1987. So, that's pretty severe. You'd have to go back 33 years. When I say 33, from 2020, not from now, from 1987 to 2020, that was the worst crash in 30, but the most severe crash. When I say severe, like the sharpest, where it just crash, 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 not necessarily the deepest drawdown, but the sharpest, quickest crash since 1987. I read that somewhere. Even then, your drawdown would have been, this is if you were trading like 7 lots of the 15 Delta or 5 lots of the 20 Delta. And this is assuming a $100,000 account. By the way, I think Dan, when you were running the back test, you just threw in $100,000 because it was a nice even round number. But the drawdown was 6.4% on the 15 Delta and 4.7% on the 20 Delta. Not terrible. I know that if you want to use SPX as a benchmark, or the index or the spider as like the underlying as a benchmark, and for all you out there who have 401ks or IRAs, I'm sure you're experiencing some pain when COVID crashed. I think at the low point it was down 35%.
Yeah.
So this was only down, if you're looking at 6.4, 4.7, that's not too bad compared to 35%, considering everybody was losing money. So, you can. I think you can come back pretty quickly from a 6.4% drawdown. Now, if it was 60%, you're not going to come back from that. That's not possible. 6.4, I think that's doable.
Yeah, that's totally
I don't think that's not a game ender. It's not going to put you out homeless on the street. But anyway, those are some of the stats, and those are some of the results, and I think we've covered just about everything that we talked about, Dan, as far as the back tests and everything, and what we came up with. Let me just say this in case anybody's curious. The number of trades, in case I know sample size is a big thing, because the bigger the sample size, the more realistic it is. From November 28, 2022 to June 20, 2024 was 392 trades. That's a pretty big size. I wish you were bigger. Unfortunately, 0DTs don't go back 10 or 20 years as much as I wish they went back 20 years, and I could say there's thousands. They just didn't exist prior to then. So again, it's not thousands of samples, but at the same time, it's not like they just came out a week ago and there's 5 samples. So 392 is pretty good in my opinion.
Yeah. Yeah. Cool. So just to kind of really quickly recap, the strategy is super simple. It's every day getting into the market at 10 a.m. Eastern. That's 7 a.m. my time, West Coast. And this is how we're going to start the paper trade on Friday. We're going to start the paper trade. And what's great is that everyone watching this video, you can just, Although you should always do your own due diligence, you can also kind of do pre-due diligence by just following along with us and watching this whole process and just see what we find out and discover. It'll be really cool. The videos will be nice and short. This is such a simple strategy that there's not really the need to sit there and watch the market like with some of my other videos. So I'll basically be doing like a really quick recap every day, showing the entry and at the end of the market getting out and what the results were. So it'll be nice, short, concise videos, super simple to follow and follow along with. And the rules that we'll be using starting on Friday will be, and this is paper trading first, we're going to paper trade for a couple weeks. And if everything goes as well as we're believing it should be, according to all of the back tests we did with Option Omega, we're going to start with real live money, one contract, and then scale from there. And you can follow along for the whole ride. It's going to be a really cool project. I'm excited about it. It'll be really fun to work with you, Rob. And maybe we can do like some occasional check-ins with each other and kind of talk about how it's going, things we may be surprised with or just whatnot. I think that'll be really cool as well. So again, on Friday we'll start off. The rules are at 10 a.m. Eastern, 7 a.m. Western or Pacific Coast time. We put the strangle on at a 15 delta on SPY. So we sell a 15 delta put and we sell a 15 delta call. And then we set up automatic exit orders for 3 times the amount. I always get confused with this part, so I'm just gonna make sure we know what that means. So let's just say we get 25 cents or $25 for one of the sells. Like, so we sell a put option for $25. Our stop loss will be 3 times 25, which is 75, right?
That's right.
So when if the option hits, raises in value, and then trade goes against us, and that option reaches a value of $75, that's where we get out. And we can set up an automatic order to do that, so we don't have to be sitting there watching the market all day. And then at the end of the day, because we're trading SPY and it's not cash settled, we don't want to go into the aftermarket with options that could be assigned. So we want to get out of the market with whatever short options we have. So we get out with the short options at, say, the 3:59 East Coast,
3:59 Eastern, 12:59 Pacific. Mm-hmm.
Right, and get out of that. And that's a daily trade. And something else I was thinking about, Rob, was that maybe I can put together a PDF of showing the screenshots of the tests that we ran. So, anyone who's interested can take a look at those. They can see the actual results for those different tests and how we kind of honed in on this particular strategy, as well as that Excel sheet breakdown that you did that showed the different market conditions and how it performed through each of those. So I'll put together something like that, and there'll be a link in the description that you can click on and see that or download it. So one last time, can you give us just the number of trades or the dates that we had back tested that we're heading into this thing on Friday with this live paper trade experiment, and the results, how many trades that were, and like the percentage return that we saw in those tests?
Sure. From November 28, 2022 to June 20th, 2024, there were 392 trades. The 15 Delta made a profit of $3,806 total. The 20 Delta made $5,550. Excuse me, $5,050. $5,050. That was the 20 Delta. The 15 Delta made $3,806. Those are one lot, trading it every day. The SPX, just for reference, it was the 15 Delta on that. It made $25,552. The annual percentage rate on the SPX was 15.7%. That's like an annualized return. On the SPY, it made 2.4%. That's using only one lot, though. If you use one lot, it made 2.4%. If you did the 20 Delta, it made 3.2% return, one lot. If you scale it up to equal the same notional value as the SPX, then it would give you about the same return, about 15%, between 15 and 16%. But if you do the one lot, obviously, one lot you are going to make less than one lot of SPX, but that's like we're talking about, you got to start out small. But that was the amount, and then the expectancy again per lot, it has a positive edge. $9.95 on the 15 Delta, $13.16 on the 20 Delta, $66.02 on the SPX. That's all one lot. That's the expectancy. It's a positive edge trade that we came up with and tried out.
Right. And when you were saying like 2%, 3%, That's just if we were doing a one lot on a $100,000 account.
Correct. That's if you're doing one lot on $100,000. That's what you would make. So that's just based on 100,000. If you want to base it on, I did not calculate it on return on margin. If you're going to do that, those figures would be much higher.
Oh yeah.
That was based on 100,000 because keep in mind, someone using $8,600 in buying power. If you got a $100,000 account, it's about $92,000 cash to a nothing. If you want to do return on margin, those figures are much, I don't know what they are, but they would be much, much better.
Yeah.
Yes.
Yeah, because we're just doing one lot. And one lot,
Right.
you said earlier, it took up about, you say it took up about like eight grand, 8,000 for
$8,600 for reg T.
Yeah.
For buying power reduction. $8,600, one lot spider, 0 DT strangle, reg T account. Yes.
Yeah. So you were only, during that time period that you went through, we were only using about that amount of buying power, $8,000. It's just calculated off the $100,000 account, but we're only doing one lot in there, which is a tiny amount, tiny fraction of that account. It's like $8,000 worth of buying power, right?
Yes.
Yeah. Okay,
Correct.
cool. And again, it's super simple. Even for myself, like I was saying before, I'm looking for a strategy that's just I can just set and forget. I don't have to sit there and babysit. It makes sense. It's easy. It has a good return. And I know that you were too. And I'm sure a lot of other folks out there are looking for the exact same thing. And we'll find out if this is it.
Yeah, I agree.
I'm looking forward to it. All right.
Me too, Dan.
Okay. Hey, thanks so much. Talk to you later, Rob.
Okay, talk to you later, Dan.
Yep. See ya. So that's it. And again, if you like to follow along with this, just make sure you're subscribed to my YouTube channel below. Hit that subscribe button. Also, be sure to join my free email newsletter where I'll be sending out daily updates and links to each day's video. To do that, just go over to my website. I'll leave a link to my website in the description below. Head on over there, sign up for my free email newsletter. And once you do that, you'll get the daily updates and stats and links to each day's video to make it super easy for you to follow along. And also, if you'd like to see all the back tests, we have the screenshots, we have all the back test results, we have the Excel sheet that Rob put together showing how this strategy performed in different market conditions. And it shows the exact rules for the strategy, all the results, and how it performed overall. So to get access to that, just look in the description below, look for the link that says the Rob and Dan Trade Game Plan and Strategy Guide. Click on that link and you'll be able to get access to all of that plus more. So again, I'm really looking forward to starting this project. I'd like to invite you to come along for the ride. You have a front row seat and see exactly how this whole thing goes down, and let me do the work and risk my money, test this out, see if it has legs and if it's something worth pursuing. So again, to get a front row seat and follow along, just make sure you're subscribed to my YouTube channel below. Hit that subscribe button. Also check the links in the description. That will show you exactly how to get all the info on this strategy. All right, that's it for today. Happy 4th of July, and we'll see you with this new project starting tomorrow.